Alright, I hope everyone's doing good, doing well today, and hope everyone had a great day. So as we can see, looking at here's 60-minute chart. Obviously, we've been selling off for quite a few days, and the sell-off, there's a lot of problems with it. It doesn't look just it is, it's a strong conviction on the part of the bears. However, look at this, tails, we're getting tails, bull bars, tails. There's some weakness behind it. So the question on everybody's mind is, well, right here. Obviously, we have a double top. You can call this double top. This is a double top. This is a double top. We broke below this low on the 14th. Well, and possibly even from the 16th of November. So one question everyone has is this? And we already reached that the other day. The question on everybody's mind is, are we trying to form a double bottom high low major trend reversal? So we have a bear trend line break to a double bottom higher low. Yeah. And anyways, we may have to get down here. However, this is a trading range. This whole thing. Here over. So one thing to think about is the possibility that we may test this breakout gap and then go down. Ideally, I tend to say it'd be better for the bears to test up and then go down. For one, it makes the math better to short. Number two, it's exhausted. Sorry, so what I mean by that is, usually in a trading range, look what happened here. We broke below, closed the gap. This is very strong down, and you have trapped bulls who want to try and get out, and you have trapped bears who did not sell this and want to sell higher. If you sold up here, let's say anywhere, you've made over 100 points in the matter of like 2 weeks, which is, it's a gift. Also, another thing to notice is this. Notice the signal bar for the bears. In a trading range, the reason you get bad signal bars is because it tells traders that they can probably sell above it and make money. So what do I mean by that? Well, let's find an example. Probably the best example is this. This selling below here, buying above here. They're dojis. Traders know if they sell above this high, we will probably go at least a little below it, which we clearly did. Also, so I think we'll get below this high. Second, you can say here's the spike, pull back, so the start of a channel. A channel in a trading range, a channel and a trading range is the same thing. When you really think about it, a channel implies trend. Trading range is just, it's weak. If we let's go example. If you said this is a channel, which you're probably right to say that, at some point, probably like right now, you're going to say that this is a trading range. Well, When you think about it, a channel is simply the first leg in a trading range. So what I mean by that, better example is this right here. This is strong. You could say, yeah, it's a trend. It's a bull trend. However, it's not really a bull breakout. You had a breakout bar here, and you had bad follow through, deep pullback. So if we're in a trend, we're either in, well, two things. We're either in a trend or a trading range. So if we're not in a bull breakout, and we may not be in a trading range, well, we're probably in a channel. Channels eventually over time become weaker, and then usually you test the bottom of the channel here. So, which is why it makes sense to sell up here. Let's take that other approach. You know, when you have a bear leg in a trading range, any go in the room, or Al's room, you heard him say through here, this is probably a bear leg within a trading range. Or, I meant to say here, this is a channel, yes, but it's probably a excuse me. Sorry, I can't stop yawning. It's a weak trend, so probably a bear leg within a trading range. A bear leg in a trading range is simply saying it's a bear channel, just not strong. So if this is a spike and this, let's say you could make the argument this is a spike down, okay? And to prove that, alright, so, well, right here. Some traders will say this was the start of the channel. Others will say this was the start of the channel. How do we know that? Well, back to the 5 minute we go. Spike, and now we have a pullback. Channel. When you hear the word channel, just think soon to be trading range. So the reason why Al said at some point we may trend down, we may go down for two to 3 hours is because when you have a channel, you get a swing down for a couple hours and then you get a test at the top of the channel. So when you think about it, the reason why Al's not selling down here is because he's looking for this. The reason why Al's not selling down here is because he's looking for this. So, you know, so when you think about buying here, this is a really good buy, and so is this, if you're betting on a test at the top of the channel. So enough of that. I could really have a lot to talk about, but it would just take too long right now. So the best I can do for the rest of the year is just look at today. I'll always try to think of any important things to talk about. Oh yeah, for this, all these days have had weak opens, but they've had a weak channel. Weak implies more trading range. Channel implies, in this case, bear trend. Take a look in what makes a broad bear channel, such as this or this, especially. Bad follow through, tails on bottoms. You get deep pullbacks, which is why traders want to get out here. So let's look at here. Well, first off, we had a gap. It's easy to see on the 60-minute chart. Right here, we've been fighting over this gap for a few days. Still have it in just because I think it's important. It likes the magnet. So we had an expanding triangle with here and here. Well, first off, we had a expanding triangle bottom, which is a lower low major trend reversal trend line. Bear trend line break to a lower low. You call it a double bottom, lower low, doesn't matter. Usually after that, you get a test up to a bear flag on expanding triangle top. Same thing with an expanding triangle top in a bear trend. You usually get a expanding triangle bottom test, but in this case, so the gap up should be expected. However, notice it's forcing you to buy above the expanding triangle top at resistance, so not a good buy. Decent short if you understand. Probably bear flag, and especially if you bet on the new low of the day, which you can see a lot of traders did that. However, great example how it's hard to stay short. You knew from just from the first 4 or 5 bars, you knew there's a problem for the bears. Possible opening reversal, but not strong enough to reverse this. Bad follow through. You have a double top, and then you get a breakout. However, bull signal bar. You have a bull bar for the bear signal bar for double top. So odds are traders will make money. Traders will make money buying below. They'll make money buying 1, 2, 3 points lower, which is why a lot of traders, when they see this, they're looking to buy. Great example would be traders waiting for this breakout, waiting for price to break out below this bar here, and buying above here, scalping out. Al does that all the time. Another example would be traders looking to buy this low, buying above this bar. So in terms of swinging this, you can sell below bar 1, strong enough breakout, probably expect a second leg down. This is probably not enough reason to get out because these 2 bear bars are probably stronger than this reversal attempt. So stop still up here. Get a bear breakout, possible 2 legs down. We're at the close of yesterday, well, near the close of yesterday. We're more in the middle of this. We're back at the low of the gap. This right here, the October 2nd high. And really, these are all minor reversals. But the one thing important to notice is right here. Why? You ever wondered why wedge bear flags, wedge tops, wedge bottoms, triangles, why they work, and the reason they work the way they do? It's really simple. There's nothing magical about it. Now, take this. Well, take the bull side. The bulls may try, if this is a bear trend, so you have to be leery of the possibility of a deep pullback and a lower high and a new low. We did it here even. Look right here. We didn't get above this high. So you see for the bulls, high, you can argue a high 2 buy. It doesn't really matter. What matters is you got a push up, pull back, another attempt up, pull back, and then a third attempt up. Well, the bulls have tried clearly 3 times to, excuse me one moment. Okay, where was I? Find my place again. Okay, yeah, here. So the bulls are going to try 3 times to reverse the market. Alright? So we have a triangle. First push, second push, third. Well, bulls failed 3 times in a possible bear trend. So they failed 3 times to reverse the market. Well, it's going to test down. Take the bear case. Bear case is simple. It's very simple. You have a low 1 and a low 2, double top, breakout, pull back at the double top, and bear breakout. Let me find another. Here's a pretty good example here. So we have obviously a bear trend, strong bear spike, a micro channel. The bulls tried here to reverse. They tried a second time. They tried a third time. Triangle. If the bulls can't get their breakout soon, they're gonna give up, which is what they did here. Big thing to notice about these days is very simple, and that is the breakouts are not strong. Good breakout. However, why the bars are getting bigger at the very bottom, bigger at a new low. That's a sign of vacuum. Here's a strong breakout. This is what a good breakout looks like. Here, 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 stronger, stronger. That's kind of excessive though. You find something that's, well, by this is what I'm talking about. You get a spike, weakness. Take these 2 bars out of the day and look to the right. From here over, you see trading range. channel. When we're starting to channel, here probably, think of it this way. By this bar and this bar and this bar, by these bars, you probably have, we can rule out that we're in a bull breakout, because we're probably not in a bull breakout. Because if we were in a bull breakout, you would see this. So that leaves us with two other options: a trading range, which we'll soon test down if we're in, or a channel. Now, I know I said they're the same thing. They are. But what I'm implying is when I say trading range is we may go up for a few bars and just turn down. When I say channel, we may go up for a couple hours and then test down. Here, a little bit of both. It's a channel, but it's not gaining that much ground in terms of distance. It did actually go about 2 hours. We rallied for about 2 hours. Notice this. This low was 64 even, this low was 64 even. So what does that mean? That means the bulls are going to try for a double bottom. When you think about it, trading range implies breakout mode. All trading ranges are searching two things. It's searching for a breakout. I think of it more as a trading range is simply an area of agreement. It's where the bulls and the bears see a fair price. However, when you get a breakout, eventually there's always a breakout. It's in search of the next fair price. Here, channel, broke to the bottom, create a double bottom. Well, arguably a double top, double bottom, breakout mode. We're going to try and get a measure move up, which we probably did. And we just kind of formed a small pullback variation, and we didn't actually get a double bottom of this. We probably got a double bottom of, well, hard to say. However, one important characteristic to notice about this day is 3 bars up, drifting up. The bears can only get 2 bars, but 1 bar, 1 bar, 1 bar, 1 bar, 1 bar, 1 bar. What I mean by that is the bears need at least 3 consecutive bear bars to really shake out the bulls. This is a pretty strong trend. So, but anyways, I'll talk about that plenty throughout the month and whatnot in the future. So what about today? Well, yesterday we had a strong, you can see we kind of followed this expanding triangle, broke below it, turned up. Not really that important. What's important is the fact that yesterday was the first time we touched the moving average. Excuse me, today's open was the first time we touched the moving average since well up here, which is like 60 bars. As crazy as that sounds. Very overdone, very climactic. Climactic is unsustainable. So, coming into today, we had a gap up. Well, possibly we had a wedge. First push, second push, third. We broke above the wedge. A wedge is just a channel stronger. We broke above it, and we're trying to get a bull break out of a bull channel. Usually fails. We went back into this area, this trading range area right here. Very common thing to happen. So, even if you don't need that information to see. I don't want to prove a point here. Look right here. This much information will tell us plenty. You can see bar 1, not a strong bar, huge tail, 1 bar body. What are the odds if you sell the high bar 1 and scaling, you'll make money? Well, it's probably pretty good. You can I'm going to kind of get the full effect. Okay, so bar 1, probably not the low of the day. We'll probably, strong breakout, okay follow through. This is trading range price action. You have to be wondering why we gapped really high up. We are well above an average price, which is the moving average. So it's forcing you to buy a weak market, a weak trend at a high price. Not a good bull bar. It's an okay stop entry, betting that we close the gap and even test down. However, I think a lot of traders will wait and possibly sell this close. Here, this is a bear. This is the bulls giving up. The bulls who waited, the bulls who did not get out below bar 4. And as you can see, sell the close, even all the way down to here. However, there's one very important. We're always in short. So the question to ask yourself is this a bear trend or a bear leg within a trading range? It's kind of a little bit of both. As I said earlier, this is weak. I think it's important. The bears cannot close this gap, obviously, until the end of the day, which is good. So it implies there is some strength. However, where are the strong consecutive bear bars? Bear breakout, not really great. Follow through, it's okay follow through, but where are these bars? And that's another thing. Before I forget, something important happened here at the very end of the day, if traders were aware. So let's take this rally real quick. You had a bear signal bar, good entry bar, bad follow through, another breakout, weak follow through. We closed the gap. Well, actually, we did not close this gap, but this is not really good follow through. Good follow through looks like this. You get, these kind of bars. Where are these kind of bars? And then, as you notice, I'm trying to think of the best way to put it. You want these kind of bars at the start of the trend. This is what makes a strong trend. In other words, these kind of bars. So, from the get-go, this is weak. We're getting bad follow through. We're getting bulls taking profits at this past lower high. So probably more of a trading range or a channel. I'll say a bull channel than a really strong trend. Well, bad stop entry for the bears. We broke out. Got a breakout. Bad follow through for the bulls. Bad stop entry for the bulls. Bad follow through for the bulls. Deep pullback. Bulls won a double bottom. Breakout above, which we clearly got. However, look at this high 2 buy. We're getting bad follow through. Then we got a strong breakout. Another strong bar. And then bad follow through. Well, there is a few. Let's think about this for a minute. Trading range day. I'm going to get rid of some of this. I know it's kind of hard to see, so I'm just want to. Today was, had big swings up and down, so one logical place to look is, especially a rally late at the end of the day after a sell-off for the whole day, is a test of the open of the day. Well, 31.50 is this high, and the open of the day was 32.75. So we came within 5 ticks of the open of the day, and we turned down. Well, it's a hard. You gotta understand what's going on. Strong enough to get always in, traders out. However, we're probably still going to get to the open of the day. Strong enough breakout for at least a second leg. Well, the breakout late in a trend, so probably exhaustion and decent stop entry. But traders who put their stop 1 tick above are probably going to get stopped out, and then we'll sell off again. So, better to put your stop up here, or if you sell this low, get stopped out above, sell again below, which had two chances. Most important thing is this. Trends usually get weaker. We had a gap, but all these gaps have been closing except for this one. Very end of the day, traders who understood what was going on, they saw a gap open, strong breakout. So a second leg up after this possible exhaustion, this gap will probably close, which it did. So if you're selling up here, if you're setting a target down here, it's a good swing trade. So anyways, selling off, minor reversal, very tight channel. Look at the 15-minute chart. That's a reference. And again, minor reversal. Finally, you have a wedge bottom. We have 3 pushes down. Failed breakout of a wedge bottom. Turning up. Okay, swing by for a test up to here or 2 legs up. However, bad follow through. Low 2 short. First leg, pull back, second leg, so it's a low 2. Bears will sell below. Bulls will get out of the longs. Some traders will get out here. Some will just rely on a stop. If a trader gets stopped out or move their stop up here and price stops them out up here, they sell again. And of course, at the end of the day, really not all that easy, because now you've got a larger spike in channel. So to spike down, first push, second push, third. 2 good bear bars at the late into a bear trend, and then we rallied to the end of the day. So really not a lot to say. Fairly not too difficult of a day, fairly simple. If you understood that there's a lot of trading range factors and you were allowing of a deep pull.